call them as mid-cap companies, approximately 8,000 crore to 25,000 crores. This is what we call the mid-cap companies, and small-cap companies are those below 8,000 crores. So we have about 100 companies in the large section, 150 in the middle, and about 4,800 companies in the small-cap sector. In Kerala, we have examples of all these. Muthoot Capital, Muthoot Finance, as you all know, the gold loan finance company. That company today is worth 45,000 crores. The market cap. Market cap means number of shares multiplied by the share price is what we call the market value. Muthoot is a large cap company, 45,000 crores. So we have a lot of mid-cap companies like Apollo Tires, and a few of them are mid-cap companies, and a lot of small-cap companies. All our banks here, the CSB bank is worth about 2,500 crores. South Indian Bank is about 1,000 crores. Then Lakshmi Bank is worth about 450 crores. So all these are generally what we call the small cap companies. When you go for investment, initially, when you start investment, we generally advise people that they should go for large cap companies because they are well researched, they are well followed by the market analysts and the experts in the line. So whatever happens there is generally public knowledge. So when you invest in a large cap company, like say, someone referred here earlier to Reliance Industries, it is India's largest company with a market value of 12 lakh crores. 12 lakh crores is about $150 billion. That's a pretty large number for a country like India. And today I read a report saying that the Western investors, they have been investing a lot of money into Reliance in the last 3-4 months. Actually, Reliance has brought into the country 1,25,000 crores in investment in the last 3 months into the country. Because of that, the foreign exchange reserves of India has gone up. And because of that, rupees also strengthened. See the impact of one company in the capital market. So people say that Reliance will soon be a $500 billion company, 3 times from what it is today in the next 3-4 years. Anyway, that's, I can speak a lot about such things, but time doesn't permit. So when you start investing, it is always advisable to put your money into large cap companies because they are safe, they are well researched, they are well followed by market analysts, and anything about that company is always public knowledge. When you invest in small and mid-cap companies, there are many things that you and I may not know and which will come to light only much later. So that's a very general point I am mentioning, but the best way to start investment in the capital market, especially for beginners, is what we call the mutual fund route. There are lots of mutual funds in India. Most of them are very well performing, well regulated area in the capital market. So when you invest in a mutual fund, the advantage is that you are putting the money in the hands of experts, and it is invested in a group of companies, not in one company. So due to one reason, like for example, COVID, if you have bought a hotel share and COVID strikes, all hotels are closed. For 1 year, they don't have business. Your investment is badly affected. But when you put your money into a mutual fund, they invest in a group of shares, 20 shares, 30 shares, 40 shares, like that. So initially, when you start your investment, it's best to follow a mutual fund route. And the only thing I want to tell, especially students, is that develop capital market habit, start investments early in your life, invest steadily, systematically. There is something called SIP. That is, you put money every month, systematic investment plan. Every month you put in, it can be as low as 500 rupees, 1,000 rupees, 2,000 rupees, whatever money you can afford to invest, you invest it and you build up that money over a period of time. When you start early at the age of 20, 21, 22 or 25, in 5 years, 10 years, it can build up, into a substantial asset. Now, before I stop, especially because this is addressed to students more, I would tell you capital market area offers amazing careers for you when you start your jobs in your lives. Capital market offers tremendous potential in the form of capital market itself, in mutual funds, in private equity, in venture capital, in investment advisory. So many wide, vast areas. The opportunities are wonderful, and as a person who is familiar with that area, I can tell you the salary and benefits in all these areas are very, very substantial, much, much higher than what you normally find in banks or normal jobs in industry and business. Capital market jobs are very substantial with tremendous career opportunities. I have many friends in capital market, youngsters, 30, 35, 40-year-old, drawing salary in crores of rupees. And it's a very exciting and highly potential area. So let me quickly summarize what I have to tell you today. COVID is a black swan event, very rare, which has very deep impact. Unexpectedly, it strikes you. Indian economy was already experiencing
Anantharaman sir. Anantharaman sir, you are not audible, sir. One minute.
capital markets. It was very badly affected, but there are very clear signs of recovery. Thank you very much for your listening. I've been given half an hour. I've just completed half an hour. I'll be very happy to answer whatever questions based on my limited abilities. Thank you very much.
Thank you very much, CA T.S Anantharaman sir. It was a nice speech. Even though our target audience was students are the majority today, and many of the seniors and professionals also attending today's program. And we have many questions also. I request participants kindly type your questions here. I take this opportunity to recognize the presence of past President of TMA, Dr. C.S Anantharaman, Engineer M.R. Govaleshwaran, Vice President Vinod Manjula, and of course, Dr. Veerakumaran, KU, Dr. Thomas Paul Katugara from St. Thomas College, C.A. Abraham Zakria, and C.A. Dharmajan Pateri from Dubai, Saji George from Dubai. These are the some of eminent members attending this program. Now we are going to the question answer session. This is a question from Vineet. Currently, Nifty is going up. According to Vineet, is there any chance of falling again? Now it is going up.
Yeah, good question, Vineet. My feeling is very definitely it should fall for some time. It has been going up too much on hopes of COVID and the liquidity that is chasing the asset class, all asset classes. There is too much of liquidity in the economy. especially in the Western world, which is coming to India also. So there is a bit of a bubble here, I think, because Indian economy was slowing down and the COVID impact is quite serious. So under these conditions, the optimism is slightly overrated is my personal view. If you are an investor, I think you will get one more opportunity to invest.
Thank you. Thank you, sir. The next question is from Mr. Munir. Why there is less insurance companies listed in stock market? Why? The life insurance companies which is listed in stock market is very less.
Yeah. You know, insurance companies take at least 10 years of solid working before they start becoming profitable. So already ICICI, HDFC Standard, Max, these three, as well as State Bank of India, all these four companies have completed that period and they are very highly profitable. They have been listed. Quite a few others are in various stages of development, and once they have a reasonable size and they become fairly profitable so that they can command a good valuation, they would be listed. That day is not too far. You will find every year one or two companies coming out in the near future.
Okay. Thank you, sir. Next question is from Mr. Sundar. Sir, what is your view on investment in gold ETF? Your view on is investment in gold ETF. Now gold prices are shooting up.
Actually, I wanted to talk about the investment opportunities, various options and things like that. There's a lot to talk, but because I was given half an hour, I thought that could be a separate topic. Coming to gold, gold is at the all-time high now. In international markets, it's not yet all-time high. It was about 15, 20 years back, it crossed $1,900. But in rupee terms, it's already almost at all-time highs. Now, a small portion to be invested in gold will be a good concept, be a good idea. Because when there is trouble in the world, stock markets and all other classes normally go down and gold goes up. So it will be a sort of a natural hedging of your investment. Trouble is there, everything else goes down, gold goes up. So from that point of view, putting a small percentage, say 5%, I would never recommend any investment beyond 10% of your portfolio into gold, because for me, that is not a very creative, very constructive, very productive investment. But as a hedge, yes. Now, personally, I have not invested in gold. I mean, I advise people, but personally, as a stock market person, as a bond market person, all my investments are in bonds as well as in stocks. Of course, a bit of real estate as well. So prices are all-time high. Please remember, gold is a good investment, but all-time high price, maybe you could wait possibly for a better time. But there are many analysts who say gold will climb from present level to $2,000 and $2,500 in the next 1 or 2 years. So nothing wrong in putting a small portion into gold.
Now, next question is from Engineer Alex P. George. Yes,
good evening, Anantaraman.
Hi, Alex. Nice to hear your voice. Very nice.
Yeah. My question is, you know, the Western countries are printing, especially America is printing dollars and pushing it into the market. With so much of liquidity in the markets, what will be the impact of it on the macroeconomic stability of financial markets in general? Because you're printing money without any base. Yes, I mean, there's no base for the printing. You're just printing.
Yeah, exactly. What Nixon did in 1972, I think. The the connection to gold was completely removed by Richard Nixon, the American president.
Yeah, but
so now I understand your problem, Alex. It's a problem which bothers seriously from a $3 trillion dollar balance sheet, the Federal Reserve of America, they say it will soon shoot up to $10 trillion balance sheet. I really do not know. But the surprising thing is, after the global financial crisis, again, at that time also they printed dollars, and everyone predicted huge inflation in the years after that, but there was no inflation. But this time, that much money is still around, hanging around, and now more money is coming to. I'm really worried. There has got to be some standard. There are some experts, global financial gurus, who say dollar could be in trouble. And China is sensing that opportunity, and they are looking forward to an opportunity to replace gold through either their own currency or their own digital currency and things like that. They are working on that thing. There are people who are worried. I'm in that group of worried people, this indiscriminate printing of the notes, as they call it, the helicopter money. In America, I am told, my daughter practices in America, she says every client's account, every business person's account is credited occasionally with $3,000, $4,000 like that by the government. When they take their bank statement, they find some new credit. When they inquire, it is by the treasury. That's the way they are pumping in money into the economy. I'm worried, honestly.
Even if you look at the performance of the stock market, it's in a clear bull run now for the last 1 month. And what are the major events? One, the war with China. Two, the downgrading of India by Fitch. Three, COVID getting out of control. Yet the stock markets are just going up, 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 up.
Exactly.
So, as an investor, Alex, for the past so many decades, I find it totally puzzling.
I think, Alex, you and I are a small minority of people who are advising caution, because when you look at the markets, sometimes you feel the whole thing is madness.
Yeah.
But
at the end of the day, you do make money. Okay, thanks. Thanks a lot. I'll leave it for the others.
Markets and economy could be, yeah.
Yeah. Thank you, Alex B. Jordan, sir, for an excellent question.
Alex is one of the most knowledgeable persons in this part of the world.
So we have 5 more minutes and many questions. We will take 2-3 questions. This is a question from Vishnu. Which are the good large cap shares to invest for beginners? Then
for beginners, I would always suggest a mutual fund route. There are plenty of very nice mutual fund schemes, the large cap schemes. The best performing mutual fund now is these days is Axis Mutual Fund, SBI Mutual Fund. These are the 3 performing mutual funds. So if you put money into a large cap mutual fund, that's the safest. But if you want shares, I mean, I'm just telling you what shares I invest. That's all what I can say. I'm investing in Reliance Industries. I'm investing in Bharti Telecom. I'm investing in ICICI Bank. Shares I'm investing now. But for a beginner, probably a mutual fund would be an easier route.
Yes. Thank you, sir. Next question is from Sangeeta. In what way we will inculcate values to the students about capital markets?
That's a very nice question. I would say capital market is the best allocator of the scarce resource in the country. The wealth of a country, capital plays a very, very critical role. We say the developed part of the world, that's the Western world. Each of those countries have got well-developed capital markets. If a sector is very inefficient, it is not performing well, capital market will reject that sector. That means no further investment will flow into that sector. If a sector is doing well at capital market, because it is an interaction of millions of people, businessmen, industrialists, bureaucrats, politicians, ordinary people, employees, students. It's a place where there are millions of people come, and it's an efficient decider of the price and values. So capital market plays a very critical role in efficient allocation of resources in a country. So that way, we have to appreciate the role capital market plays in any economy. That is very broad, the macro area. In a micro area, in an individual, for an investor, wealth creation, and people don't understand the difference between income and wealth. Most people go after income. They go for a job because they want money for a living. But wealth creation is a different thing. You have got to, out of your income, you have to save some money and invest it into a proper place, and only that investment is going to create wealth for you. And capital market is the best place where you can keep that investment for wealth creation.
Thank you, sir. I think we are running short of time. Probably this will be the final question. Jose from Jose AM. I would like to know about outward FDI from India. What are its dimensions and prospects? That is outward. Kindly mute your sound, please.
Yeah.
What are the dimensions? Yeah. What are the issues involved
investments
in? Yeah. Yes.
Go ahead. Ask the question.
Yeah, I would like to know about outward FDI from India. Outward FDI. What are the dimensions and prospects? What are the issues involved in outward FDI from India? This is a beautiful question from Jose.
Yeah. Jose, good question, Jose. See, you take about 20, 25 years, you go back. There's practically no outside investment from India. If you leave India, you will get $8. When I left India in 1974, I got 8. Anything more than that was very difficult. So question of investing abroad was extremely difficult, and there were very few like Aditya Birla Group which invested outside. But today the situation is totally different. We are the largest private sector employer in UK, erstwhile colonial master. UK, United Kingdom, the largest private sector employer is an Indian. There is a Tata Group. They have got the TCS, Tata Consultancy there. They have taken over their largest steel factory and so much other investment. So today, India is a major investor in many countries. You go to Africa, I worked a number of years in Africa. There are many countries with major investment from India. South Africa, there are dozens of large companies in South Africa run by Indians. All over the world, you find pharmaceutical is one area where Indian pharmaceutical companies have taken over very large companies in Europe, United States, Africa, Far East, everywhere. So FDI from India is a pretty large amount. Very substantial amounts are being invested outside. And these days, if you have confidence, if you have some track record and all that, investing abroad is quite easy. My family has done it. I'm sure there are many in this listening to this webinar who have investments outside. The formalities when you invest outside, in those countries, it is very little. But the formalities from India, still we believe in the bureaucratic wranglings and things like that. But the minute you are outside and the money has legally gone to the outside country, abroad, almost in any country, formalities are very simple. And I think it is much easier to invest and make money abroad if you have the willingness, confidence, and courage to do that.
Thank you. Thank you, sir. Any participant would like to ask any question, this will be our final question. Please unmute yourself and ask questions.
Anantharaman sir, this is
Yes.
Shantakumar.
Hi, Shantakumar.
No, I thought I will add something to what you have said. You
Yes.
said the markets are very high, and Alex was supporting your point. The thing is now, if you take the S&P index, it is 24, and Nifty is about 22 PE. So it's very high, it is very heated up, and I think a correction is inevitable.
I agree.
And number two, regarding the money printed by the US and all that, for US there is no issue in the sense that US currency is an international currency, and all the countries are again going back and investing their money in the treasury bills. So it is not a money simply printed, it is fully backed by investment from other countries which is coming into US in the form of treasury bills. So I think US can afford to do that, which countries like us cannot do. Even though many experts in India are saying that to get over the COVID, we should monetize this and all that, which is not affordable at this juncture. That's all what I want to supplement, sir. Thank you.
Fully endorse the wise words, Shantakumar. What you said is true. I believe every word of it. I endorse. We have been very calibrated in our approach. And the only thing I'd like to add here is the way US is going, the way US is printing, the way they are spending money, and the lack of the carelessness, the careless way of doing things. I feel US is likely to lose the leadership of the free world. And I mean, I only wish it doesn't happen because I have vested interest in America. My children are there. But the way they do things, I think they are overdoing. At this rate, there could be trouble for dollar. There could be trouble for American economy. I hope it doesn't happen. Thank you.
Yeah,
absolutely.
Thank you, absolutely. And we hope that there might be a change of guard in the US after the elections. And when a new president comes. Yeah,
the only point I want to add is Trump is very friendly to India. So from an Indian point of view, Trump is, and one more thing I'd like to add here, just mainly for the benefit of students. See, there had to be a global leader. I would definitely like India to be the global leader, but I don't see that happening in the next 5 or 10 years. So we have to just depend on somebody else. And my daughter, who knows Chinese very closely because she did her project's PhD with lots of Chinese, what little I understand is that it's always better to have America as our leader than China as our leader. So yeah. I hope America improves.
Yeah, any day. But the thing is, the popularity of Trump is coming down, and recent survey shows that it has come down to only 46%. It used to be 53. It has come down 7%. To gain 7% in the next couple of months is next to impossible, I think.
Correct.
Thank you.
Thank you, sir. Thank you.
Thank you, Shantakumar sir, for excellent supplement, and thank you, T.S Anantharaman sir, for a nice session. And we from the TMA extend our sincere gratitude for sharing your rich experience in this field. Now, I request CA PJ Shaji, coordinator, TMA student chapter, the proceedings all to you.
My side. From my side, I would like to thank Mr. Anantharaman sir. It was a nice experience. In a short time of around 25 minutes, you could compress the global economy with the COVID, and it was a good learning for me. In fact, I prefer to interact with you on a different occasion so that we'll have some.
Always a pleasure, sir, knowing you and interacting with you anytime. It will be my pleasure.
Thank you, sir. Thank you. I wish the Thrissur Management Association for having given me this opportunity to interact with all you people. Thank you.
And you,
Sony, Mr. Sony, please go ahead.
Yeah. Or to PJ, CA PJ Shaji.
Thank you, Sony. Thank you, Anantharaman sir. It was a very excellent presentation. It was, I think all the students will like it because you have gone down to that level so that all the students can understand very well about the capital market.
We serious also students, sir. We are also students.
Okay.
There is no age limit for students.
So very excellent class, sir. They may ask for one more class.
Anytime. My limited abilities are available to you.
Okay, thank you. Thank you very much for spending your time. Now I invite our treasurer, CA Manoj, for the formal vote of thanks. Manoj?
Yeah, thank you, sir. Really happy to propose vote of thanks for a wonderful session by Anantharaman sir. As always, Anantharaman sir's perspective on economy and capital market was really amazing. Sir, it was really a wonderful session, and all your positive thoughts on India makes us really happy. You have shown us how the capital market works, and thank you very much, Anantharaman sir, for your wonderful words of wisdom on investment. Thank you, sir. I would like also to thank Dynamic President of Treasury Management Association, C.S. here, for organizing this event. And would also like to thank Shaji PJ, who is the convener of student activities of TMA. Thank you, Soni and Shaji. Above all, students, TMA members, and all the invited guests, we had more than 100 participants today. And I'm sure that all of you have enriched today's webinar. Thank you all. Over to Soni.
Thank you, all participants. With this, we come to end of this webinar. And once again, thank you for sparing your precious and valuable time with TMA.